1 year in crypto is 10 years in equities. Okay? 1 year in crypto is 10 years in equities. If you guys want to invest in the crypto market and you guys want to make money over time using the crypto market, this is a very, very important thing to know, okay? Very important principle to understand when going into the crypto market. And there's a lot of reasons why, but the main reason is because crypto moves extremely fast, okay? Crypto is a very, very fast moving industry. And I think this is something that people need to understand. And what do I mean by it's a fast growing industry? What do I mean by it's very fast? We're gonna talk about that in this video. But before I do, I wanna let you guys know that nothing in this video is financial advice. I'm not your financial advisor. I'm not your financial counselor. What you decide to do with your money is up to you. And you need to take responsibility for your buys and your sells, all right? Now, 1 year in crypto is 10 years in equities. What do I mean by this, right? What do I mean by this? Well, in the crypto market, all right, 15% a day is nothing really that crazy, okay? If you have an asset and it's $10,000, right? And it moves up 15% or it moves down 15%. That's normal in crypto. Maybe some negative news happened or maybe some positive news happened that, excuse me, that allowed those assets to move like that. But a 15% move in the stock market or, the debt market or something like this, that's a crazy move, guys. If you move 15% in a day in the stock market, that's insane, whether it be up or down, all right? The crypto market's a little bit different. And this is exactly why a lot of people in traditional markets, they come into crypto and maybe they don't get the same results because they're not used to that volatility, okay? The main point that I'm trying to bring home, the first point that I'm trying to bring home to you guys is that crypto is a very volatile market, okay? It's very volatile. So if you wake up 5% moves, 10% moves in the crypto market, if you bought an asset and then the next day it's down 15%, 10%, that's normal in crypto for the most part, okay? If you buy it and it goes down 15% or if it goes up 15% based on a negative news event, that's not anything crazy. That's nothing to be, shaken out for or anything like this, okay? Every 4 years, crypto goes up by a lot. Everybody in crypto makes money, and then it takes a very big dip down. Okay, it usually takes a dip between 80 to 90%. As the market evolves and matures, it's going to get less volatile over time. But for this video and the purpose of this video, okay, the crypto market is very, very volatile. Okay, it's a lot more volatile. It moves fast. It moves a lot faster up and down. Okay, now why is this? Okay, the reason why this is because volatility is essentially when an asset is volatile. What that means, guys, is that people are trying to figure out the fair value of the asset. Okay, sometimes people are really excited about crypto and it goes really up. It goes up by a lot. All right, and then at other times they go down and the reason why this fluctuation happens so much is because people are just it essentially is just people trying to figure out the fair value of the assets, right? So that's the thing, okay? It moves very, very quickly. Now, if you look at the trajectory of the crypto market, you look at the value accrual over time, the overall crypto market, it's up and to the right, right? It's up and to the right. Bitcoin, if you zoom all the way out of the chart of Bitcoin, it's up and to the right. If you compare the price chart of Ethereum, it's up and to the right. So from the grand scheme of things, okay, it's up and to the right. You make money when you buy crypto. But a lot of people maybe who buy assets and, they take a dip or they take a massive correction. Maybe they timed things wrong. They bought when everybody else was already hyped about it, when everybody else was already paying attention. And then they get frustrated and they felt like they missed out. But you got to realize, you guys, just a couple of years ago, 5 years ago, Ethereum was $70. Ethereum was $70. All right, it's approaching 3,000 now, and that's likely pre-altcoin season, pre-bull market, and it's very possible that we get an Ethereum season some sort of altcoin season the second half of this year at some point, okay? So that's just something to keep in mind. Bitcoin was $3,000 in 2019, 2020, right? 2020, 2019, before COVID, $3,000, right? People don't think about stuff like that, but the overall trajectory of the crypto market is up and to the right. It's like one year's worth of gains in crypto is 10 years worth in equities, okay? For the terms of volatility, but not just the price action, but it's also the amount of stuff that happens in the crypto market. Crypto moves very quickly. A lot of these projects are startups. A lot of these projects are getting funding from people. A lot of money moves very fast because it's very liquid. It's the most liquid asset class in the world. You could access it at any time, any place. It can be traded 24/7. Stocks, you can't do that, right? The price moves very fast, okay? Not only does the price move fast, but the tech moves very fast as well. With these softwares, with these networks, there's always upgrades. Essentially, it's a race right now to see who gets the most value accrual of all the blockchains. So all these teams and all these blockchain, not companies, but these foundations and these teams are building very, very quickly and upgrading their chain. And blockchain technology is a very misunderstood still compared to where it probably will be in 10 years in terms of the tech. So people are massively improving the technology for these things. And to pay attention, it's a little bit more active of a investment than maybe a stock or an equity, because in a stock or an equity, essentially it's just the PE ratios, the fundamentals, maybe current events and what happens, profits, earnings, like I said, significant managerial changes and things like this, maybe some business changes that need to be talked about, whatever the case may be. But in crypto, these things are moving massively. Okay, there's bugs, there's hacks, there's upgrades, you got to move. The blockchain is forking, et cetera, et cetera. So it moves a little bit faster than equities. It doesn't require you to be full time into crypto in order to invest in solid assets, but it is faster. Okay, the results are faster. But not only are the results faster, but the current events and the news is also faster because it's a rapidly growing industry, right? So that's something to keep in mind a lot, and that's why a lot of people who come from trading stocks, or maybe they're options traders, or they try to apply the same principles in the stock market or in the crypto market that they do in the stock market, and it doesn't work out for them. Sorry guys, I have a congestion in my throat. But why do you think that happens? Because they try to apply the same things to the stock, like the crypto market, as they do the stock market, and it doesn't work out because it's not the same game, right? It's not the same game. It's more volatile. You don't even need leverage in crypto in order to make massive returns, all right? In order to make massive returns, you don't need leverage, okay? So that's just something to think about, okay? That's something to think about. And, if you're new coming into crypto, right? If you're new coming into crypto, you might not understand this quite as much. But if you have history buying stocks, or if you have history investing outside of the crypto market, you come in the crypto market, you realize it's very volatile, and it couldn't stress you out more than it probably should, especially for you older guys who aren't used to it. Okay, it's normal. Okay, this volatility in crypto is normal. Volatility is actually your friend if you know how to play it the right way, if you know how to use it to your advantage over time. But a lot of people don't understand this, which is why a lot of people get shaken out. They see a 10, 15% drop in their assets, and then they end up quitting, or they end up, getting shaken out of the market, which is exactly what the people who make money in crypto want you to do. So I'm encouraging you to not do that. Hopefully this video is a little bit helpful for you guys in terms of understanding crypto. But just remember that 1 year in crypto is 10 years in equities in terms of the price and the news and things that are going on, because it's a rapidly growing industry. But overall, the trajectory is up and to the right. It grows a lot faster than most stocks. It grows a lot faster than other industries. And that's why I believe that this is the place to be if you want to put your money to work for you. Okay. So I hope you guys have a good day. I hope you guys are DCAing. I hope you guys are taking advantage of this. I hope you guys are enjoying the bull market pump. Some of the coins that I've been talking about are starting to wake up and go on tears. Pengu, Polemos, all these other coins that we've already talked about. All right. If you guys want more details of that, you guys want to stay up on the crypto market, I have short form content. I have all that stuff. And if you want to learn how to fish, if you want to learn how to do crypto research yourself, the way that I have, okay, you could get a coaching call with me, and you need to jump in my Telegram and you need to message me privately for that. Okay. Like the video, subscribe to the video, hit the notification bell, all that stuff. All right. Instagram, chase your race. TikTok, chase your race. Okay. Thank you and bless up.